So the Russian economy appears to be following the standard wartime trajectory of the Soviet Union, as like the Soviets when they were fighting in Afghanistan, the Ministry of Finance has announced a series of tax increases across multiple sectors. These hikes will affect profit taxes, personal income taxes, VAT, taxes for small businesses, the excise taxes on real estate, and other items. Notably, there will also be a new tax on antiseptic alcohol for medical purposes, which is a bit strange to me. Now, this move comes despite previous pre-election assurances from President Putin that taxes would not be raised, which is a pattern that seems to consistently play out when it comes to Putin, in that the opposite of the things he promises is what always happens. As a result, we're probably going to see price increases across all sectors. Russia has also classified its data on gasoline production, so it's not sharing that anymore, which underscores the impact of Ukrainian attacks on its oil refineries. Reports indicate that a production drop of over 20%, coupled with rising prices, are causing Russia a huge amount of economic stress. In fact, Russia can no longer support itself on its oil reserves. S&P's Global Commodity Insights estimates that Russia's fiscal break-even point, the amount that they need to sell a barrel of oil to make the amount that they put into it, is now $114 per barrel, which is up from $65 a barrel before the war. Currently, oil sits at $77 a barrel, so Russia is losing $37 on every barrel of oil it makes. The war is placing immense strain on the Russian economy, and the military budget is set to increase that further. The budget deficit for April has reached $50 billion. This is a significant amount when you understand that Russia's annual budget is roughly $365 billion. This deficit is more than double the planned amount for the entire year, let alone the month. This situation is unsustainable, and it raises questions about how long the economy can hold before it collapses, frankly. Additionally, it's important to note that in Russia, a salary of only $2,000 to $3,000 per month is actually considered high. Yet only 3% of the population earns such wages, classifying them as the rich upper class. The average GDP per capita stands at $10,500, which is making it difficult for Russia to sustain 8% of its GDP being spent on its military. It's also worth noting that the salary that I quoted is not the same thing as GDP per capita. That's why those numbers are different. Now, raising taxes on the public and the few remaining profitable businesses will likely lead to higher inflation. And the Russian central bank claims the Russian inflation rate is 8%, but most actually believe it to be around 15% based on actual surveys of goods. To curb this, the central bank is poised to raise interest rates further, which already stand at a really high 16%. That means it'll be nearly impossible for a Russian individual to borrow money. This economic facade of strength is unsustainable for Russia. Russia's economy is comparable to the size of New York State or Australia, and it is actually smaller than Canada's. So there's not a lot of ability for Russia to absorb this downturn without impacting the Russian people. But we'll have to see how this plays out in the war effort and the future of Putin's regime in the Kremlin.